Trump's inauguration started the Bitcoin decline. On the day of Trump's inauguration, Bitcoin hit a new all-time high.
I would give myself an A+.
Closing very, very weak from that point. We find ourselves down $35,000, 32% from the high. And if you can see what I've labeled on the chart today, 1, 2, 3. Not just 3 days down from an all-time high, not 3 weeks down from an all-time high. This is 3 months down from an all-time high. Lower highs, lower lows. Now, the only thing that can save this at this point is for the month of April to close above the previous month's high. That number comes out at $95,129. So we're looking for a close in April above $95,200. Can Bitcoin do it? That's the big question, at least on my mind. If it's on your mind, hit the like button, subscribe to the channel, to your home of macro cycle analysis. And today we've also got the feuds between Trump, Elon Musk, and his fake advisors.
Is that a joke? Oh.
But of course, this has all stemmed from the Trump inauguration, from Trump getting into his first day in the office. The trends have been down, the weakness has been building. But of course, I want to go through the charts with you in today's video, looking at key support levels to hold the structure of the bull market. So let's dive straight into the charts, looking at the price levels and clarifying those today. Obviously, we've had a little push down as the market opens today, and the current low is the 7th of April, coming in at $74,400. So as it stands, should this continue to hold, well, it's not in the worst position. The 50% level is the ideal closing price for the end of the week, that coming in roughly 5 days' time, and that's got to be above $79,200. So it's a little bit of work for Bitcoin to do at this stage, but stranger things have happened. So in terms of the prices, the weekly needs to be above 79,200, and should Bitcoin keep falling somewhere back to Trump's election, back around here, so $69,000 low, then the structure of the market still remains. It's still above the major 50% here. This is the bull market 50%. And provided the price remains above this level, basically monthly closing basis, well then the bull market hasn't broken down. It's just come off a long way from the high. And essentially from that top down to the 50%, that would take things out at a staggering $46,700 down from the high, nearly 43%. And so in terms of a dollar figure, it looks absolutely crazy. But in terms of a percentage, well, I'm sure you've seen those before. It's happened many, many times throughout other bull markets. So 40% isn't necessarily crazy. It even happened last bull market where we saw 50% through that couple of months decline from April down into June. It was about a 54% decline. The market was able to consolidate. There was pretty much a grind all the way for 2 months into the July low, and then it pumped out of that area. Are we going to be so lucky this time? Well, we'll have to wait and see. But I think even if we do get that lucky this time, we've got to see what the macro environment looks like at that stage, because this, for all we know, could basically come down and then rally back up into a macro lower swing top. And the more this thing breaks down, the lower it remains for longer, then I'm starting to lean more towards a lower swing top. But as those things happen on a macro basis, it's not going to seem like that at the time, because of course you start to see the rally, people will get excited, Trump's done something new. You're going to see a lot of excitement to think that we're going to go back over 110. And maybe we do go over 110, but again, it's just everything getting broken down here. It doesn't seem like it could go that much further in the macro bullish case. So we've looked at this thing coming all the way back down to 62K. What if we do get that rally all the way back up? Well, it's got to overcome the diagonal first that led to the breakdown. So right underneath these lows, that's when things got really serious. It broke down and the volume increased, breaking that low, basically like your old Wyckoff gotcha bar, holding people into positions at higher prices, and then it gets them as the market crashes. So on that rally back up, depending at what time we get there, whether it's August, September, October, November, that price will continue to increase. So somewhere around 96 to 97 should it be 4, 5, 6, 7 months away from this point. Now, if it happens sooner, well, then that's going to be closer, sort of 93, 94, and that also comes out at some shorter term 50% levels. Should this be the low, well, then you're back at around 92,000 right between the middle here. So that's the first thing that we're looking at with the price of BTC. If it is able to get above that, well, then it's got to contend with the diagonal overhead here. This one here connects 2021 to 2017 and then projects it out, hitting both of these tops in 2024 and 2025. So depending on what time, again, that hits, whether it's November this year, that could be somewhere at 119, maybe 120. So it doesn't seem like the impossible, but it is getting harder and harder for Bitcoin to basically rally from that point. And I know the next thing a lot of people are looking at are, say, global liquidity index. And I did a video on this just a week or two ago, and I suggested that sometimes this thing gets curve fit. And I look back to 2021, and particularly this one here. This one is with the 10-week lead. So one that I didn't show in that previous video. I looked at all the other global liquidity indexes, and this one here basically pushes out 10 weeks. Okay, so there's the global liquidity so far. And so you can see from 2021, it doesn't line up. You've got the global liquidity increasing and the Bitcoin price collapsing. Again, the global liquidity drops, Bitcoin price starts to come back. So I guess this is where people have really held on to the idea that this global liquidity is going to come and save the day. Now, I'm not saying that it won't. I'm just saying to be cautious that curve fitting simple things like a global liquidity index can, what problems they can cause to someone's trading plan. This is not a trading plan. It's a hopium line, and I hope that it does work out as well. But I'm taking it with caution here, hoping that it, of course, does work out. Let's see what the charts and the market tells us over the coming days as the bottom may begin to form here, or we get a dump down to the 69K low here, potentially even further down to the 50% level. Nonetheless, the structure is still in there, and the hope is still there that we could see further rallies here with the global liquidity coming in. But on that global liquidity, that's where things start to get a little bit messy. And we start to look at things like the bonds and the yield as well. So the US, well, the bonds at least, the T-bonds, have started coming down. They started collapsing. So countries aren't wanting the bonds anymore. They're not buying them, or they could rally together and sell them off and even sell it short, basically dump the bonds. Someone needs to buy the bonds. And so for the US, well, how do you get people to buy the bonds? It has to have an attractive interest rate. What's happened? The interest rates have skyrocketed. We're at 4.357% now. This can all change, of course. Trump does many crazy things I'll get to in just a sec. But these interest rates have started to increase, hoping that, I guess, someone comes to the party to buy up the bonds so that more money can flow back in to the US, of course. But if it doesn't, then this is going to get a little bit tricky. And what we're seeing with the interest rates, at least from the probability standpoint, this Fed watch tool, is that they're hoping you're going to get a cut in interest rates. But this puts the Fed in between a rock and a hard place. If you start to cut interest rates, then the bonds don't look as attractive because you're not going to be making money from buying bonds. So why the hell are you going to go and buy US bonds? So what are they supposed to do? Cut the interest rates or increase them? The bonds market here is forecasting, at least in the short term, while there is a ton of volatility here, we don't have a break at this top yet. 4.4% would be a really key area. Look at the swing low here, the previous breakdown area. That would be an interesting point if these markets get to it and close above it. The point I'm making here is the market is looking like they are going to increase the interest rates despite what the market, well, despite what this market is getting the probabilities for in May, is that they're going to cut the rates. And of course, I guess the majority of people would love rates to be cut because that would mean your home loans are going to get cheaper, so on and so forth. But they are looking more and more like they're under pressure to increase the interest rates. This was put together very, very well by Shapiro. I love his work. And I think very few people really understand how this is working. Now, what do you think is going to happen if the interest rates go up? I think it's going to put a bit of pressure on homeowners, or especially if we start to see some more changeover between purchasing. So basically homeowners looking to get new home loans, that's obviously going to increase things quite dramatically. And generally towards the end of the cycle, which is what we're in now, the winner's curse phase, we've seen a lot of winners. Maybe this is part of the curse. And the real estate prices have not collapsed. So we haven't seen a land-led recession yet. This is all part of tariffs and what's going on here. But this could force the hand of higher interest rates. Could, of course, early days. And then the bonds, hoping to get more bonds being bought, as we looked at on this chart, which are basically declining here. The Fed has to come to the party and then increases the money printing. So the money printing turns back on. So if for potentially, for a short period of time, this could be what leads to that final move, that big boom up to whatever prices it is, we don't know, but just looking for that end of the cycle move. And at that time, I suspect at least Trump believers and maybe the market might think, well, this time is different and we're able to save the whole sinking ship. But that's where I'll be getting very, very cautious. That's why I'm saying now when it comes to BTC, although I'm loving the hopium of the price rallying to 100 or 120K, I'd be very cautious should we see over the coming days or weeks here through, sort of April, May into June, as we're looking at yesterday with the cycle analysis, any sort of tests of these low 70s, high 60s, maybe even into this 50% level, the rally out of that is going to be the key there. It might catch a lot of people by surprise, thinking that, of course, we're going up. We have to take out the all-time high. The money printer's on, and this time we're going to continue on. The 4-year cycle's broken, and we're going to keep going up with this money printer. So the main thing is, I wouldn't get comfortable on any one of these scenarios. Things are volatile at the moment, as expected with the winner's curse phase of the markets. Therefore, always be on the lookout and alert, especially towards these peaks. I think the peaks, as I've said time and time again for years, running up into highs, I think are the hardest games to play. For me, at least, they're the hardest areas to decipher what's going on. The lows, I think, are way, way easier. So if there is a bit of icing on the cake here for anyone that's watching, thinking, what's the point of any of this? Well, it's about patience, one, and two, you have to stay with the market, watch it. Doesn't mean you have to be in the market, but watch something. Watch Bitcoin every single day. Look at the price and watch how it, whether it goes up or comes down. Watch for these lows that begin to form. The lows are by far a much easier game to play. Buying somewhere around the lows and then holding on for the ride. So basically just a little bit of icing on the cake. That I know it's a long game. I know it's a bit of a patience thing here. We've talked about where this thing could go in the short term based on several, indicators here, looking at the bonds and the interest rates, what could potentially happen to the end of the cycle as well, with prices increasing, interest rates increasing, and then everything falling over at the end. One thing's guaranteed, it's never an easy ride when Trump is in power. Trump just brings the extreme emotions and the volatility to the market. So I guess it's quite fitting that he's there at the end of the game too, towards the peak of the 18-year cycle. Now, here is a bit more of the background to these tariffs. Dumber than a sack of bricks. Musk's feud with Trump trade advisor Navarro escalates. Navarro said something about Musk, saying that he's not a real car manufacturer. He's basically a car assembler. Musk says he's truly a moron and gave him his own name, Peter Retardo. So there's Navarro. Why is he giving him that? Because he's created a fake expert he invented called Ron Vara. So who's this guy? Navarro? Peter Navarro. Created a fake person, Ron Vara. This is just coming from the news. Who knows? In a day's time, it could be true, but it's sounding pretty damn fictional, especially if you want to ask Grok. Referring to a fictional pundit, Navarro, quoted in a series of books and policy memos using an anagram of his own name. So Navarro, when you mix up the letters, becomes Ron Vara. And why this is so important is because Trump has based his tariff policies on what his advisor has told him. It's insane what's going on over there. Here is one here. I know that the haters, they're going to say, well, it's NBC, which is why I showed you the Elon Musk thing first, and it's on Grok too, so it's on all of the news programs here, whether you're a left or a right, I don't care. But you know, you can ask Grok. Grok says yes, it's true. Peter Navarro. You might say, well, maybe Musk has told Grok to say this. This is the craziness that I guess is happening towards the end of this 14 years up. The extreme volatility, the extreme emotions, and just the ridiculous wild ride that's going on. As you can see from some of the other headlines here, US raises tariffs on China, 104%, China potentially coming to the party here, and something else coming down. So that could change in a moment, you know, day to day here. And with the US stock markets basically bouncing and then crashing again in the same day, some of the largest moves in history. Here is the close, rising 187 points, and then on the day basically coming all the way back down from the peak to the trough. It's a huge day in itself, 360 points. Like that'll be from 6,100 down to about 58. So it's basically like a bar you would see like this. That's what's going on at these lows, which is typical of a very volatile dump into a low. You'd expect that sort of bounce, but the bounce at the moment has been relatively short-lived, with the opening of the next day coming further down again. So on the one hand, I guess, you know, we're talking a lot about expect the unexpected or expect the volatility. But on the other hand, it's like, well, you expect the volatility, but you just really don't know what it's going to look like when it plays out in day-to-day life. And that's just part of the markets. It's very, very challenging, especially at these times when there's no stability in business confidence. So this is that part of the tariffs. If you want to go more into it and get more into the soap operas that is US politics at the moment, be my guest. You've got Griffin calls tariffs huge mistake, hurting middle class. CEO of Citadel LLC. Look at that net worth, $40 billion. So on that, we've got wild times in the S&P 500. The support levels still at 4,800. These are some levels that I never thought would be hit in 2025. I was very much of the view 5,100 would be a very strong level. And on that, I'm going to go through my 2025 forecasts in a video coming up. So make sure you hit the subscribe button and like the content.
Because I have common sense.
A lot of those have been absolutely thrown out the window now, and I need to reassess them and review my thoughts after we get some more clarity from the market here. So stick around for that. That one's going to be quite interesting. Now we've got the NASDAQ also down at those levels there on the previous old all-time highs, touching those levels. Slight bounce here as well. I think if Trump doesn't do something quick here, these could all end up all the way back down to the 50% level from the COVID low. So that's pretty dire there, going back to 14,500 points. Now, as a thought experiment here, let's take it back all the way to the beginning of the cycle. The cycle beginning in November 2018 for the US stock market of the NASDAQ. Okay, so the NASDAQ 100 cycle low back in November 2008, and we know for the S&P was March 2009. So the tech stocks bottomed first, and then the S&P bottomed second. This would be absolutely wild. The 50% level comes out at 11,700 points from the top to that level. That is a 47% decline. I am not saying that is what's going to happen. That brings you all the way back to the banking crisis low, but for a 50% decline, basically the entire bull market range thus far, that's where you would go. 10,600 points down, 47 points, and then we would look to do the same thing on the S&P and the Dow as well. So let's take a look at that. Low to high comes in at 3,400 points. So basically back to the bear market low of 2022. Of course, again, I have to emphasize, I am not saying that this is what's going to happen. For all we know, the basing out happens between 46, 48, and 5,000, somewhere where it is now. And we start to see things climb back again. That, in this case, maybe at a slower pace again, underneath some of the trend lines, and that leads to further weakness into 2026. Of course, the market might look different at that time. You'll see it going up. People will think it's all back on, but the speed of the increases starts to dissipate, and that's where you get the complacency from. So Spoken a lot about other markets at hand. Cryptocurrency fear and greed is at 18. And as for the stock market at 4, yesterday was 5, the day before was 4. So some very, very extreme fear, which lines up with the COVID crash for the stock market. But as for BTC, back at 18. And in terms of a reading here, still about 2 weeks to go on this fear and greed index, looking at around that 5-month period. I think if we can't find some higher lows around that 5 months, maybe even into the 6-month mark, it would potentially be fair to say that we're running through a bit of a bear market here. So I don't want to cause any sort of FUD. I'm just looking at the numbers here, looking at the highs to the higher lows on the market sentiment. And without any sort of long reading back into, so it's an extended period reading into the greed or the extreme greed, then it's pretty well unlikely that we're going to see higher prices than the current top, that 109,000. So April, interesting time. May, another interesting point. Basically, Q2 is up in the air at this stage until we find a low, find some stability in the market. Trends are still down, lower highs, lower lows, daily down, weekly down. Monthly is uncertain at this point, high highs, lower lows. But as I said in the intro, these 3 bars, I prefer my bars, the 3 bars are not showing a great sign here. And in previous bull markets, we haven't seen that at the peak. We haven't seen lower highs and lower lows on 3 consecutive monthly bars from that top and the market continue up higher. You can see here from April, that was a red bar, but we're talking about lower highs and lower lows in the price. The time we saw it was back in the 2019 run up. Big, big, big boom. You had an inside, down, down, down. Inside just means lower highs, higher lows than the previous bar. Same thing happened in that month, then a down, that's a down, lower highs, lower lows, don't forget, and then another down here. So there was the 3 after 2 insides. So really you had a bit of a pause, then the down happened, and that basically kept the market down for many, many, many months from that point. So this is why I'm saying Q2 is basically decision time for BTC. Now the fear and greed has helped out tremendously from this peak as well. If you guys recall back at the tops, there was a lot of uncertainty around this tool, suggesting that things were worse than they were, or they were better at the time, and to use different indicators. Nah, this one here, again, proved itself with that patience. So yeah, as always, stick around with the patience for your trading plans. So over to some of the majors here. Ethereum is on its way down. It had another fresh low today, just touching around 1385. That is the level of the banking crisis low, 1370. And my double top price target is still on the cards here around $1,200 US. You can see the 150% of the monthly double top traded down is at 1,166. So calling around that rough number of around $1,200 also takes us back to the lows in November when the crypto and crypto market bottomed in December. Bitcoin bottomed around November, and ETH, for some crazy reason, bottomed in June of 2022. On top of that, let's look at Solana, which has continued to slump. Now, there was a lot of calls from prominent figures saying that Solana was going to do well in March. It has continued to crash, especially, they were looking at this being something good because of global liquidity and those sort of things. The market has continued down. Still no signs of a bottom here. I would be very cautious of trying to pick lows when there haven't been any signs of a low forming here as yet. You can just see that the trends are still all down at this stage. Same deal with XRP. It's finally had a close below the 50% level. So as I've been pointing out, I'm watching here around 60% dump, takes it down to about $1.40. And if there's no signs of a low forming, well, then we just keep watching it on the way down. SUI, same sort of thing. It's tested a couple of lows here, but really no signs that it wants to rebound. So I'm looking at roughly 78%, which is what it did last time, into that low at around 50 cents. That takes this one down now to about $1, $1.10 on those previous tops. Still a bit of time there as well. And finally, USDT dominance. This crept up yesterday after a pretty nice day for the bulls. This huge rejection. So it's crept up again today, trading higher again. That's why we're seeing Bitcoin and ETH drop off a little bit here, and of course other altcoins. And that target, that 50% target, is at about 6.6%. That 50% is basically the all-time high of USDT dominance, 9.5%, down to the current cycle lows at 3.7%. So that 50% level slices through there at 6.6. Today we cover a lot of new ground here, looking at the bonds, interest rates, US markets, real estate cycle, potentially how all this is coming together to the end of the peak. So stick around for the journey, hit the like, subscribe button here. And if you want to go further with this with your trading and investing plans, check out TIA Premium. Link is in the video description. See you guys at the next one. Till then, take care. Peace out.